Good morning, folks. Morning. So, thanks for joining. Sorry about yesterday. I couldn't do a webinar simply because I've not been very well. You might be able to hear from the tone of my voice, it's a little bit lower than normal. And it's because I've had a bit of a chest, wouldn't say infection, but just basically a cold that's landed on my chest and hasn't let me recover. So yesterday I kept coughing. I couldn't talk. So that was the reason why. And this morning, the reason it's earlier is because I'm going to be out of the office this morning. It's that second Wednesday where I normally don't do a webinar, but I figured after yesterday I would do one today instead. Anyway, hope you're all well, and we'll jump straight into the charts in a second. Just the trading disclaimer that trading financial markets is risky, involving the risk of losing your invested money. All trading decisions should be at your own risk, and make sure that you have a trading plan and stop losses on all of your trades. All right, so the obvious issue that we've got at the moment is the fact that overnight, well, for me at least anyway, depending on where you are, overnight 2 US military bases in Iraq were attacked. So the Iran Revolutionary Guard was quick to claim responsibility, claiming that it sent tens of missiles, and there's some YouTube video circulating of that as well. The latest reports are that a total of 15 missiles were fired, with about 11 hitting their targets, and 10 of which were a particular base, an important US facility in Iraq. And at the time of this recording, and the time that the reports were released, the size of the damage is unclear, and it's not really been confirmed whether there have been any casualties from the attacks. And in response to that, US Trump has quick to write on Twitter that all is well. Typically ridiculous tweet. I mean, what does that even mean? And the assessment is taking place, and then obviously there's going to be another response. So it's escalating, as you would expect. How the financial markets are taking this at the moment, I mean, you can see a huge gap down this morning on the DAX. You can see things like Bitcoin increasing at the moment and gold increasing. Oil is obviously taking a hit. I mean, I don't know what the markets are waiting for in order to turn completely bearish, but it would seem that the escalation of this kind of war is clearly not ready to dump the market. But I'm certainly going to be remaining bearish to the downside. So Trump emphasized on Twitter that we do not seek escalation or war, but will defend ourselves against aggression. Yeah, all right, okay. And so at the moment, the markets are looking at a sort of a wait-and-see kind of mode in respect to the Middle East tensions. So we'll just have to wait and see what the next step is. But I'm expecting it not to be good, and I'm expecting it to hit the market. And hey, I hope I'm wrong. I hope I am wrong. All right, so what else have we got? As far as the market is concerned, I mean, really, there isn't a huge amount of economic data coming out today. There's a string of Tier 2 releases, and so that's notably things like the business confidence and the consumer data in the Euro area. And there's going to be maybe some sentiment stuff, like, for example, the IFO looking for that for further improvements, and maybe the December PMI signal looking for stabilization. So we'll keep an eye on that. There's Boris Johnson's meeting up with European Commission Chief von der Leyen, Downing Street for the first time, I believe, for face-to-face talks. And it's all going to be about Brexit, negotiating a mandate after the UK has formally left the EU. In the US, there's the ADP report, which could give some kind of influence for expectations ahead of non-farm payroll. But I was actually wondering whether non-farm payroll already happened, but I guess it didn't. I must have missed that. So if I haven't made a mistake there, then that'll give us some expectations for Friday's NFP. All right, so that's pretty much it for that. So let's jump into the charts. So we'll look at the 60-minute chart first of all. I've got a question to kind of swing back to from one of our subscribers who's just discussed about the chart that's on the website. So I'm just going to load that up in a moment, and I'll have that ready to go. But on the 60-minute chart, let's just take a real look at this. So compared to Monday, yesterday, which is contained within this range here, was pretty quiet, eventually closing around the point of control at 160, I think that might have been. But we'll need to take a look at that in a moment on another chart. Most interesting part of yesterday's price action was that we attempted to create a foothold above this 160 zone. And this 160 zone, this blue zone here, I've talked about it in a previous webinar, has been a gap zone here at the beginning of the year and a gap zone here at the beginning of the week. And yesterday we sort of found ourselves above that despite we didn't really break above it with any significance, but you can see this sort of double tweezer here just underneath that zone, and then we've managed to find ourselves above it with, if you like, a rejection candle right at the bottom of that range before looking up to new highs, tagging it once more, and then finding ourselves just above it at the end of the close yesterday. However, this morning we've gapped below it, so really, how significant was that? Probably not very, very much. So we still managed to hold the 941 low. This is the 2020 low this morning on the gap. But if we do get a continuation move to the downside, I'd expect that to go, if not today, tomorrow. And there's not really much more to look at on there. I think I've actually just closed another window by accident. So I need to reopen that. It's away from the chart. You didn't quite see it. There we go. So the command I was intending to press was this one. Moving us on to the next chart. Now, there's not a huge amount to discuss on here. This is the 10-minute chart with an RSI indicator on it. There's only one thing to really point out is that we had a number of sell signals from this indicator yesterday, all of which were rubbish. But it was interesting to see how, with not a lot of a bounce from this low, the signals was saying that we were oversold, where in actual fact, it wasn't even really getting started. So it just goes to show how much this kind of aggressive sell-off can impact this particular type of strategy. But yeah, I'm not going to waste any time on that one today. Let's just jump straight into the daily here. So the blue zone is an obvious barrier to break for continuation move to the downside. We're in the bottom half of this upsloping pitchfork. We actually tagged the median line from the underside yesterday. You can just see here. And regarding the EMAs, can't see them, but they're on the bottom of the chart down here. The numbers are along the bottom in this text bar here. You can see that the 5 is below the 8, despite the fact that the 8 is still above the 50, which is still above the 200. But that initial warning of the 5 being below the 8 could be interesting, especially if we start to now break to new 2020 lows. And then we'll be potentially looking to see if we can find ourselves down at the 2019 value area high, which is at around about 1216. So that'll be a longer term target, I think. All right, let's move that forward. Key levels for today. Point of control is up there at about 13200. Can't quite see the numbers. And you'll notice that we had this large gap this morning, of which we've attempted to try to close, but failed. And the point that we failed is the value area low from yesterday, 13141. If that level is broken, 13141, and we continue to move higher, then you'd expect to reach the point of control. It continues to move lower. I'd like to see a continued series of lower lows, lower highs, eventually breaking the low from this morning. All right, and I think that's pretty much the majority of the charts that I wanted to look through this morning. The exposed points of control that are worth pointing out would be this one here from yesterday, 13118. We've got another one back here from Thursday, which is around 13378, a bit higher maybe. And whilst it's possible, it's probably unlikely that we're going to get down at the 12864. Now, you might sort of say to yourself, we're already below this point of control, and that is correct. And you can actually see that price action is trading at 1395 at the moment, but we don't see any new profile. And the reason for that is that it's too early for me. It's 7 o'clock in the morning here, And the charts don't normally start drawing the new profiles until 8 o'clock. So I'll just move that back to 5. Oh, that's going to take some time. Scrap that idea. I've got too much data on the chart. I'm just going to abort that. But that's the reason why you didn't see it. Anyway, but moving on to the chart that I wanted to share with you, which is the trading strategy, the DTI. Let's move on to that. Now, your Sierra charts might look a little bit different to this. You might have a black background or an orange background. You might have a different status bar up here. You might have no status bar up there. Whatever your Sierra charts looks like, doesn't matter. If you have Sierra charts installed and your charting background is black, you just need to be aware, and this came up this morning, that the arrows are printed in black as standard. So if you don't see arrows and you have a black background, that's the reason why. And it's easy enough to change that. Just right-click Studies and go to the down arrow. Now you may not have a few of these extra subgraphs which I have added to this, but you can ignore that. You should probably find that it's going to be something like 6 or 7 is the ID number, or maybe 5 or 6 is the ID number for the down arrow and the up arrow. Just going into those. Go to the subgraphs tab and change the color of the arrow to something different. Once you've done that, it should then show up on the chart, assuming that you've got all of the other steps are correct. All right, without further ado, let's just jump into this. So I think we've looked at the 6th already, and you'll notice that there were no sell signals until down here, and I think that might have been one that I took. Oh, excuse me. That's not anywhere near as bad as it was yesterday. But I'm sorry to inflict that on you. Anyway, so there was a sell signal on the 6th. It failed. I think that was one I took. And then there was a move into a bullish bias. And plenty of buying signals, of which you could have taken if you wanted to. I didn't, because I was looking for shorts. But to give you an idea of how you would do that, as soon as this arrow formed because it was the start of the next candle, but the actual signal came because the previous candle turned green in a bullish zone. Okay, that's the reason why that would have been an arrow. So it forms on the start of the next candle, which is your entry point, and you would then use the previous candle's dot as a stop loss marker, put a stop loss below that, enter as soon as you can on this new candle. Now that might mean that you're a few seconds late, so maybe you didn't get in until the high of that candle, whatever it might have been. That's where you'd get in. That would give you a 23.5 point stop loss, and you're looking for 4 to 1 on your trade. So that'll be a 94 point target, and obviously you would stop your trade if it hits a stop loss. You can move your stop loss into or move it to break even once the trade hits a profit of the same size as your stop loss, basically, whatever that might be. So once you get 1% into profit, you can move it. What do I mean by 1% into profit? I talk about 1% because that's the maximum amount that I risk per trade. Okay, so each one of my stop losses, regardless of its size, risks 1% of the account. Okay, so that's why I say once I'm in 23.5 points of profit, that's technically 1% profit, because a stop loss is 23.5%. 23.5 points, and that would be 1% of my account as well. All right. So once you're 1 to 1 in profit, or 1% in profit, as I call it, you can move your stop loss to break even. If you want to be more conservative, you can wait for 2% or 2 to 1, but it's up to you. So that would have enabled you to move your stop loss to break even after 1%, but I don't think you were really in trouble at any point on that trade of getting stopped out at break even. There were a couple of points where, had you have moved your stop loss to trail behind these dots, that you would have been closed out. But I tend to operate a sort of a more set and forget type strategy personally. You don't have to follow the way I do it, but that's just what I prefer to do. It's easier. Requires less, I don't know what I want to say. I want to sort of say some sort of management thing. Yeah, like macro management. You don't have to sort of really get involved in everything. Okay, so that would have been for the 6th. If we look at yesterday, Now, I would have been looking for shorts yesterday. I didn't trade anything at all yesterday, but had I have been trading, I would have been looking for the downside moves. But there were plenty of buying opportunities for those that maybe use the strategy a different way. And the first 3 would have been losers, so that would have been it. You'd have been out. The rule is 3 bullets and you're gone. That would have been a bullet. Well, actually, maybe not. I give myself the benefit of the doubt there. Maybe that one wouldn't have been a bullet. But the point is, that one would have been and it would have lost. So either way, you'd have been shot. So the first bullet may not have been a signal for the simple fact that the candle that preceded it was yellow. And the yellow is a deviation warning candle. If you get that, ignore it, because it's suggesting that it's stretched. If anything, you could fade that, but that's a completely different strategy altogether. For example, these. Okay, so the first signal would have been a loser, second one would have been a loser, and the third one would have also been a loser. So there have been 3 bullets, you're out, move on. However, I wouldn't have been taking any longs yesterday because I would have been looking for shorts. And the first short that came would have been around about lunchtime, and it was as soon as the bias turned to bearish. The first signal would have been this one here, and it's been mapped out already. Stop loss above the dots. Get in as soon as you can, so maybe you would have gone in a bit late, depending on where the price action was at the moment you entered the trade. It's a 12-point stop loss in this example. The previous one was, what, 23 points? So you might say, well, that's cost me more. It's 23 points on that one, but it's only 12 points on that one. And the simple answer to that is no. I mean, and the reason for that is a 12-point stop loss will cost me the same as a 23-point stop loss for the simple fact that I would enter less contracts on 23 and more contracts on 12. But either way, if either of them hit stop loss, it's going to hit 1% of my account. But I don't care how big the stop loss is, well, within reason. Normally it's got to be under 50 points, otherwise I can't really afford to scale it. But a 12-point and a 24-point means nothing. To me, it doesn't mean anything. I just scale the contract size to make sure that it's 1% loss. If you're not sure how to do that, well, that's why I did build that app on the website. So let's go to, excuse me. Ugh, God, I hate this thing. Not my website, the cough. But if we just go onto the website, and that's what this trade position size calculator will help you do. So put in your numbers, whatever your account balance is, whatever you want to risk per trade, so 1%, however many points that stop loss was, and however much it costs per point on your chart. So, you know, if it's €5 and you've got, I don't know, 45,000 euro account, then you can have 8 contracts on DAX Mini. If you're trading CFD and you've got a 7,000 euro account and it's €1 per point, then it's 6 contracts you can open. If you've got a, I don't know, £900 account and it's spread betting, which only costs 10 pence per point, then you can have 8 contracts under those situations. And that's how you do it, to make sure that if you hit your stop loss, you're not going to lose more than 1%. So use your calculator, guys. It should be in your trading plan anyway. Okay, so that's that. So that was a winner. That was a comfortable winner, in fact, for yesterday. So congratulations to the guys that did take that. If you didn't get the first one, you could have got the second one, which would have also been a winner. If you didn't get the second one, you could have got the third one, which also would have been a winner. So yeah, happy days. Get yourself in on the strategy. Use it however you like, and you know, don't rely on me, because if I'm not able to make a trade and you miss it, you know, you can be annoyed. There are lots of ways to get this. Either get the strategy yourself, or get yourself over on the website and have a look at the live stream. Find the details there for yourselves. You can see it. I've put all the tools out there for you to use this stuff. But obviously the best way of doing it is to get access to the strategy. All right? And there's plenty of ways that you can do that. All right. So I think that's pretty much that. I haven't got a steer for what's going to happen today because it's early, and 8 o'clock is when the bias changes. So, excuse me. So at the moment, it's a bit early. So I'm going to jump into this question that I had, and from Rich. Hi, Rich. Is this chart in UK or German time zone? All right. So my chart's in the UK, and I have no long signals for yesterday. Where are they? Well, I mean, I guess you probably just need to go and have a look at the time, because in the inputs for the up arrow, when you go to the alerts tab over here, you're probably going to see something like this, like bar time plus, is greater than time. There's a little function there. If you remove those bar time functions, it will probably show you more signals, because I think because you're in the Philippines, possibly, Rich, you're ahead of time. So it might mean that this sort of restriction on the time is going to sort of fall outside of that parameter for you, because you're however many hours ahead. So you might want to remove those, and maybe that will fix that for you. So that's the first thing to answer. Hopefully that helps. The second question that I had was to do with the chart on the website. All right, let's just take a quick look at that. Let's see if I can bring that back up again. Here we go, chart on the website. Okay, and the question was, you have a huge red candle on the 1st? Oh no, 8th of January, right, you've put it American way. Okay, so I keep saying 1st of August. January 8th. And so it'll be this one here, which I assume is UK time. Good question. Where is the time on this? Is there a time? Yeah, 7:15, 7:15. That's UK time, yes. 5-hour difference. My charts are in Eastern time because my main trading is USA futures, ES and NQ. Okay. So don't know if that answers your question or not, but that is UK time, I guess. Hopefully that helps. All right. I think that's it for this morning then, guys. So I am going to probably call it there for today. I do invite you to send me messages if you want to know anything specific, either about the strategy or about any of the tools that are on the website, or techniques that you want to use to kind of make sure you're trading properly. Whatever you want to know, let me know, and I'll bring them up in the webinar for you. But I think for today, I'm going to leave that there. I'm going to go and dose up some more meds, get rid of this chest thing, and then, yeah, I'll answer any other questions when I come back into the office. All right, guys, have a good trading session. Oh, I wanted to show you Bitcoin. You're doing it on the arrow, right, Rich? As far as removing the conditions, you're doing it on the buy arrow, right? Not the sell arrow. So it will be the up arrow in this case for you. And I wonder actually whether... No. Yeah, I mean, to my honest, it can't be anything other than that, because I think DTI runs, if I'm not mistaken, DTI runs all day. It doesn't matter what time zone you're in. And you can see that my arrows only start from 8 o'clock. I'm wondering whether maybe there's any other condition that might also need to be amended. So let me just take a quick look at this real quick. ID3 is my intraday. 28 minus 1 is greater than 1. What's 28? Can't even remember. Yeah, I don't even need to remember. Wait a minute. 28 is the up arrow for that one, so that's fine. I wonder if we show those what it actually does. It does show arrow. Is it possible DTI is hard coded in the time zone? Is a question I'm asking myself. Yes, it is. In which case, do I need to rewrite the rules for an up arrow that avoids using DTI? Well, let's try it. That's at the bottom. Just call it test. And let's just do it. I've got a few seconds or so. All right. I can remove that. ID1 SG3. What's that? ID1, that's MACD. That's fine. ID17. ID17 is the green candle. So ID3 SG17. SG21. All right. So let's get the overlay back a bit. And so we should be able to get an arrow just there. Oh, come on. Early. Haven't had coffee. Alright. So I need to only get one of them. Alright. No, wrong way around. Alright, there we go. That's the one I want. Alright, so Rich, I've got a solution that I can do. I can just send you over a new criteria, basically, for the up arrow and the down arrow, which just removes a hard-coded condition that hooks into in my DTI, which you can't change, which is the time limit. So I'm surprised I actually haven't had a few other Asian-based users pick that up. So I will be able to do it for you, but we can just pretty much just reprogram a new one, and it will take into account your time zone earlier in the day to make sure that you get what I would consider as early in the day for me. All right, I'll send that through later. I can just copy paste onto alert tabs. Yeah, that's right, exactly. Well, no. Yeah, I guess you could. You could replace the one that I've already got for you there with that code. set to Eastern. I'm not too sure what you mean by that. As in Eastern, like New York time, or Eastern as in Asian time. But whichever way around it is, you might need to just play around with how you want it to go. New York time, right? Got it. Thanks. Okay, so I'll have to probably do that for you a little bit later, though, because I'm going to need to close up and get myself sorted to leave the office in a moment. But that's what we're going to do. So yes, I can sort that for you. There is a solution, and we can get that in place, no problem. And I can apply that and roll it out to anybody else that is needing to change their time frames. Feel better, thank you. Yeah, I know. What can you do? But thanks for joining, and welcome. And I'm glad you're another Sierra Charts user. It's always it's always good to connect with people. And we will catch up with you guys a bit later on. Have a good trading day. Let's just hope that war doesn't escalate by the time I come back into the office. And guys, okay.